hey,
magnificent,
hey,
magnificent,
hey,
magnificent,
hey,
magnificent,
hey,
magnificent,
hey,
magnificent,
hey.
In the last episode, we covered forecasting. Earnings are where those forecasts meet reality. An earnings release only looks complicated if you read it top to bottom like a normal document. So don't do that. Read it like a pressure test. You're trying to answer a few questions fast. Did the thesis change? Did the business actually improve? Were the headline numbers clean? And is management helping you understand the quarter or helping you look away from something? Have a process and hunt for what changed, but keep in mind that hitting expectations on the prior quarter isn't really going to move the needle, even if those expectations are for a double beat. The market reacts when there's new information that wasn't priced in. Always start with guidance. If it's there, that's usually where you'll find unexpected information that the market could react to. Guidance could be in a release, a shareholder letter, an investor deck, an 8K, or in a call transcript. If there is a call, pay attention to how management frames that future story. What changed, what they feel best about, or anything they try to soften that looks weaker. Wherever the guidance is, go there first. You want to find an outlook on revenue, EPS, or margin. If there's demand language, spending plans, anything that resets expectations. If a company missed on a quarter but had improved guidance, that matters more than if they beat and had weaker guidance. The market can forgive a bad quarter, but not a weaker future story. Then hit the headline numbers. Revenue, EPS, maybe operating income if they feature it, but read them against expectations. That's the whole game. Revenue is the money the company brought in. EPS is earnings per share, which is profit divided by shares outstanding. Diluted EPS is usually worth a closer look because it includes things like options and convertibles that can become shares. You need to understand if the company beat or missed expectations. If revenue grew 18%, it can be bearish if the market expected 22. Same with EPS. Same with margins, same with guidance. Earnings aren't graded against last year. They're graded against the number that's already in people's heads. Then go one layer deeper and read the business. Revenue tells you how much came in, but it doesn't tell you how impressive it was. So find the source. Was it more units, higher prices, acquisitions, easier comps? Was it segment strength or segment weakness? One good segment can carry the whole release and overshadow something more important underneath it. And that's how people get fooled. They read growth and assume quality. Quality lives in the margins. Gross profit is revenue minus the direct cost of making or delivering the product. Gross margin shows how much of each revenue dollar survives those direct costs. Operating income takes out the rest of the operating expenses like payroll, marketing, and overhead. Operating margin tells you how efficiently the whole machine is running. This is where the release stops being PR and starts becoming useful. If revenue is up and margins are up, that's strength. If revenue is up and margins are down, the company could be forcing growth, discounting, spending too aggressively, or losing efficiency. If revenue is flat and margins improve, that can still be a strong quarter because the business got more lean. Going straight to margin structure gives you an edge over others who only focus on revenue and EPS because that's where you see whether growth is actually worth anything. EPS is an output, not a verdict. It comes from net income, which is profit after everything, including interest and taxes. But EPS also moves because the share count moves. Buybacks can lift EPS without changing the business much. Dilution can pressure EPS even when the business is improving. Tax effects can move it. Asset sales can move it. And so can accounting adjustments. So when EPS changes, ask a sharper question. Did profit improve because the business got better or because the math around the profit changed? That one question alone will put you ahead of most people reading the release. Then go to cash flow and the balance sheet. Pay close attention here. This is where you'll find out whether the quarter was financially solid or just cosmetics. Earnings can be shaped by accounting, but free cash flow is a lot harder to disguise. Operating cash flow tells you how much cash the business generated from its normal operations. Free cash flow is typically operating cash flow minus capex or capital expenditures, which is money spent on long-term assets like stores, equipment, or infrastructure. That tells you if the business is actually producing excess cash after the spending required to keep it running and growing. Cash is king. It can pay down debt, buy back stock, build reserves, reinvest, make acquisitions, or simply survive through tough times. Then check cash, debt, and liquidity to see how much short-term financial flexibility the company really has. Now it's time for cleanup work. One-time charges, adjusted numbers, GAAP versus non-GAAP, tiny line items, and vanity metrics. GAAP follows standard accounting rules. Non-GAAP removes items management says are less representative. You're checking for things that could have changed the story you already got from the quarter. number. If it explains a genuine unusual event, that's fine, but if it mostly makes the numbers look prettier, be careful. And if the same costs keep getting excluded, it's just part of the business. A broad rule to follow here is don't let secondary details overrule primary evidence. If the business slowed, margins weakened, cash flow declined, and guidance softened, no amount of adjusted optimism should rescue the quarter in your mind. By the end of the release, you should be able to answer 4 things quickly. What happened? What beat or missed expectations? Where did the real strengths or weaknesses show up? And did forward guidance get better or worse? That's how you read earnings with an edge. By knowing exactly where to look, exactly what to compare, and exactly which details deserve your attention. So see the story before you see it in a headline. Like, subscribe, follow @TheMagnificent on Instagram and X, and let's keep the education going every Sunday at 11 a.m. Central.